All right, so folks, we're welcome to today's used car marketing dealer strategy session. I'm Ryan Girardi. It's great to be here. I had a couple panelists lined up that last minute something came up, unfortunately. So you just get me today, and we do this the first Thursday of every month. The first Thursday of every month, and there's a webinar portion. And there's the live streaming portion. And so if you're interested in being part of the panel discussion here on the webinar, let me show you what to do. I'm going to share my screen and show you some real cool stuff here. All right, let's see. Ding, 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 right there. All right, so if you head on over to autoconversion.net, look under webcasts. And here you'll see auto retail and look for used car marketing. If you can do this right now. If you get registered right now, you'll get Zoom will send you a link to access the webinar portion. And once you're there, you'll be able to ask questions on the Q&A feature. You can raise your hand, you can chat. I could even bump you up to be a panelist, so you can stream your video, you can talk and share your opinion, your ideas, and your thoughts. We're here today to focus on preparing for summer. So, looking out, I just watched Jason Rice. He does, it seems about 2 or 3 times a month, he gets up to Facebook and does a live stream and talks about the used car business as well on his Facebook page. Jason's really knowledgeable. He comes from Lot Pop. And, he pointed out something that we're all noticing is there's a buildup in inventory right now. I just saw that the annual sales, the SARS rate right now is actually over 17.4 million. This is new car SAR, over 17.4 million, and used cars is at 40. So right now, all forecasts and predictions would suggest that we are going to sell more cars in 2019 than we did in 2018, which I don't think anybody would have seen coming, and I do think there's a lot of speculation that still won't be the case, but who knows? And it doesn't even matter. I think really, it's going to be close. It's not like we have to sell more cars than last year. It will be close. But here's what does matter is what do the market conditions look like? We have supply. We seem to have a surplus in supply. Obviously, that's going to drop down prices. Everybody, I think, expected for spring, right? Because we just came out of spring. I think a lot of folks expected prices to really fall in spring. They didn't fall to the extent that we thought. I know we had Stu Zaladon last month, and got into a nice conversation around the wholesale markets. If you didn't catch that, let me tell you what to do. I'm going to show you my screen again. And I got a couple news items to hit for everybody as well. Let's see here. Ed Dodd, raise your hand if you want me to bump you up here to panelist. Since we haven't spoken before, I can promote you to panelist and turn your video on, or if you want to talk. Some people come onto the webinar and just want to listen. I did have a couple news items I was going to show as well. Let me bring up. So the podcast from last month with Stu and I is up on the AutoConverse podcast, pre-owned volume trends for spring of 2019. And then we publish all this up to autoconverse.com. There's a used car marketing category under the opinion menu right here. And we were looking at, so we got really more into sourcing a couple of months ago. So building on that, here's what we're seeing. We're seeing a surplus occur in new car volume, and which has everybody on edge about how that's going to affect prices. We're expecting prices to really, really fall over summer. So yeah, it's kind of like, I wouldn't say it's a unique time. I think we see this once or twice a year. I think there's a lot more speculation that goes on. And really, what really matters is what do the numbers look like? So a couple news items. Let's get into those real quick. Black Book Index dips for the 5th consecutive month, actually. I don't know if you caught wind of that. falling for 5 straight months. It's reading at about 1.4% higher than a year ago. This is the retention index on how long people are keeping their used cars. This was back in early May. The April report came in at 113.6, which is about a 0.2% dip from March. So I'd say relatively inconsequential. What else from Black Book? They tabulated the 14 segments. Here's what's interesting. So we know Ford pretty much all but bailed out of the sedan market, and crossovers and SUVs sales have just been the prominent segment of car sales. And now we're seeing a shift, actually. Segments that saw a positive change during April included sporty cars, compact cars, subcompact cars. There's crossovers of pickups and SUVs in there too, full-size pickups, minivans. What saw negative dips, I think, were a lot of was it luxuries? No, it wasn't luxuries. Everything really saw positive. Again, car sales are up, so we're seeing that. But the retention rate has dipped. So what does that say? Are people getting out of their cars sooner, consistently, which I think would not be expected? Love to know your opinions. Feel free to chime in if you're up here. Ed, Richard, if you have any opinions on that. Again, I can bring your audio up as well. But the index is still slightly higher than where it was a year ago. So 2018, spurred by economic growth, resulting in significant demand for affordable used sedan values. The Black Book retention rate is it's calculated based off of vehicles from 2 to 6 years, whereas I think Auto Trader does 1 to 5 years. If I'm correct there. So what else? Carvana. So the Auto News top 100 used car dealer groups just came out late last month, and Carvana, which this is the first time hitting the top 100, they debuted at number 8. Think about that. Carvana went public about 2 years ago. So last year they were not on the top 100, and this year they debuted at number 8. So in 2018, Carvana sold just under 100,000 vehicles, which was about double what they sold the year before. Okay, so that's, what do you call that? 100% growth, pretty much. Now, they're in 85 markets. By the end of 2018, they're in 85 markets. Now they're at just over 100, I think about 115, 120 markets. And this came up, I think back in February, Ed French was on here, we were talking about this. Carvana has its sights, their sights are set on selling 2 million cars. Now, to give you some perspective, CarMax, which is pretty much year after year the number one, most volume used car seller in the business, CarMax is just under 1 million. Carvana is trying to get to 2 million by 2021. Leave my opinion out of this. I'd love to know what others think out there. Is Carvana growing? Absolutely. Like I said, 100% growth from their first full year. But their goal of 2 million cars is pretty lofty. To give you some perspective on the marketplace, CarMax is about 1.5% to 2% of the used car market. Is that right? Hold me accountable if I'm wrong. Lithium Motors, Penske. I think Penske's number 2, right? They're at 283,000 used vehicles, just under 283. Lithia is at number 4 with 150,000. So obviously Carvana is solid player at this stage, solid player with some real ambitious goals. So something to keep your sights set on. Now, in regards to Carvana, they are now aiming to raise $500 million by selling off some debt and some equity. So to give you some perspective, and I don't want to be redundant from a couple of months ago, but Carvana is yet to make a profit. They're losing money, something like $250,000 a quarter. No, sorry, something like $250 million a quarter that they're losing on their business. So investors are certainly they like what they're seeing from where Carvana is growing. Okay, they're selling more cars. They are tightening that gap of loss, but they're still losing money. So they're looking to raise $500 million. This came out last month. They're going to sell 3.5 million Class A shares of common stock and get underwriters the right to buy up to 525,000 additional shares. This comes from Automotive News, by the way. That equity amounts to $270 million based on pretty much just under a $70 stock price up there. So they're offering $250 million of additional senior notes that are due in 2023 for private offering. So we'll see. Something to keep an eye on. Carvana's come in strong. They're playing hard, and they are the real deal. So what else we got? I don't know if Jason brought this up on his. Depreciation seems to be on the rise. A report came out just last week that depreciation on used vehicles expected to climb this year as some of the factors that helped keep it lower in 2018 are starting to peter out. So we had low interest rates, good credit availability, and high job growth. 2018, the U.S. economy just really headed in the right direction in so many ways, but that's pretty much hit a plateau. I think you throw in the tax cuts that came, that were in there. Depreciation really held steady at 12.5% for 2018, which was down just about a whole percent from 2017, down about 4 points from 2016. So analysts basically say we've hit that peak and we're going to see depreciation start to go back up. So yeah, lots to think about right now. And again, folks, I'm not in the used car business. I don't sell used cars, but I talk to a lot of used car guys, and usually they're up here. So didn't have them up here today. Here's a question for you, and this comes from our good friend Joe Pistel, who recently, congratulations, Joe, joined the team over at Cars.com. He's now head of marketplace. But Joe put out a good question to the group, which is, how much do options and packages impact what cars you buy and how you price them? So some of the comments that came in from there, let's see. Give me a second here to let that load. LinkedIn's funny. LinkedIn's funny how it's not loading. But that's the question, I think, for a lot of folks is when you're acquiring used cars, whether they're on trade or whether they're coming from private sellers off the street, how much do options and packages come into play? We've had folks on to talk about the importance of using those as not bartering, but negotiation points, specifically negotiation points for making sure you get the right price, make sure you get the right price offering. So let's do this. I just wanted to go over the main headlines. Again, retention rates declining, depreciation's on the rise, seem to have a surplus on new and used cars. How's that going to impact the used car business? Let us know your thoughts. Here's what we do. We record this, we release this out into the AutoConverse podcast. Let me go ahead and share my screen again here. So if you're not subscribed to the AutoConverse podcast now, we do a lot more than used cars. We do used cars once a month, the first Thursday of every month. Here's what you can do. Get yourself registered. You can come up here as a panelist and join whoever's up here. We've had Jason Rice, Ed French. I had Stu Zalad last month. Gary Wade, love when he's up here. Just a lot of really good, knowledgeable guys. Joe Pastel was going to try to make it today, but he is in transit. So definitely get in touch if you're interested. Once you get registered, you will also be given a link to our LinkedIn group, our LinkedIn discussion group. And we have now launched a members only network on Slack, and we've set up a channel for used cars as well. So if you're in the used car business and you want to get dialed in with other colleagues and peers in your field, then get registered. Go to autoconverse.net, look under webcasts, look under auto retail, and you will see it. All of this is brought to you by Vehicle Acquisition Network, helping connect private sellers with dealers. You can go to buywithvan.com to get your free market analysis on what's available in your market. Again, Vehicle Acquisition Network is helping you connect dealers with private sellers of used cars. I'm Ryan Girardi. Thanks again for tuning in, keeping it short and sweet like we normally do. Again, first Thursday of every month. Please join us next month, and have a great rest of the week. Good luck this summer, and keep your guard up. Lots to think about. Take care, everyone.